May I have your attention, please?
Welcome to Real Gaijin, unveiling the real Japan, an American expat's inside look. Now it's time for another story from the Read My Lips series of podcasts. Summarized podcast.
Okay, we are live. Hey, it's Mark Kennedy. I'm the host of the Real Gaijin Substack and AMA Ask Me Anything podcast. Today, it is literally class is in session because we have a very special guest, Dr. Daniel J. Mills. Daniel, you want to say hello?
Hi. I'm coming to you from Shiga, Japan, pretty close to Kyoto. It's great to be here today.
Well, thank you very much for joining. Daniel is very accomplished. He's not going to tell you all this, so I'm going to have to tell everybody about his background. But he is a professor of economics at Ritsumeikan University, which is in Shiga. Now, the head branch is in Kyoto. It's one of Japan's most prestigious universities. He's been in Japan for almost 20 years at this point, and he is an expert on financial education. So he's really good at explaining the basics to his students, which includes all of us today. The other thing that he does is he is the publisher of the FI Professor website. It's a wealth of information about financial independence, especially from the perspective of resident foreigners, particularly Americans living and working in Japan. So check that out afterwards. I'll put links in the final write-up to this podcast. A couple of basic things before we get started. First of all, this is an ask anything of Daniel. So please, class participation is going to be great. No, I'm kidding. Please just ask anything, but want to caveat that with the fact that we are not going to identify you by name. So you can literally be asking for a friend. And of course, maybe that means your situation, but don't worry about that. Put your questions in the chat and we'll try to get to them as we go. The other thing is we will be recording this session, and I'll give me about 24 hours, and I'll publish it after that, both on Substack and in YouTube. So you can go back and check for more details. And we'll put links to all of Daniel's key contacts in the final write-up. All right, without further ado, what we thought we'd get started with is let's learn a little bit about Daniel. Daniel, you're from California originally. How did you end up in Japan? Tell us the story.
I've always had a connection to Japan. I was actually a martial arts teacher back in the United States for many years. And so I studied a little bit of Japanese at that time in university. So I wanted to come here, but my 20s were not that productive, I don't think. I didn't graduate university till I was about 28. So I was working pretty much full time and doing university on the side. So I didn't come here till I was 28 years old, but it was really a lifelong dream. And I think like many people, I had planned to stay for maybe a couple of years and then go back for a master's degree. And I met my wife after 1 year and I've never left. So yeah, I've just been here ever since. And I started off when I first came as a eikaiwa teacher, teaching little kids. Learned all about kancho that they love here, and I realized pretty quickly that that's financially it's probably not the best move forward if you're going to stay. And I think I was more interested in teaching adults. So I went back to school. I got a master's degree and then a doctorate degree and slowly worked my way up into the university system. And now I'm a professor in the Faculty of Economics. One thing I will point out is I'm not an economics professor. So my doctorate is actually in education. And what I teach is sort of economics, English for economics type courses. But it has economic topics. So, for example, financial literacy is one of those topics that I teach. And I also, do a lot of the educational technology for our department.
Got it. And
Yeah.
you've literally written a whole textbook series, right?
Yeah. So we have, with my partner Steve Quasha and I, we've written Think Big for Business. We have a series of one back here. That's Think Big for Business. It's a two-part series and also deals with personal finance. But we're in the process of writing Think Big for Personal Finance that should be out next year. And it's for English language classes that are specific to personal finance. So I'm working with some professors in Tokyo at like Chuo University that have personal finance courses. At Ritsumeikan, we don't have a dedicated personal finance course yet, but it's something I'm
Mm,
working on developing. So hopefully in the next couple years, that will be an option for students.
that's terrific. And hopefully it's not just an option, it's like a mandatory requirement.
Yeah, I'm not sure how they would do it initially. It has become mandatory now for Japanese students. I think in the high school or junior high school level,
Oh,
with some of the new
oh,
guidance from Lombusho to teach personal finance. So that's been a big boom to my research. I currently have a Kaken grant from the government to study personal finance education and AI. Um, and I
okay.
think that one of the reasons that was accepted so readily is that Japan is trying to implement these personal finance classes at the lower levels before they even come to university.
Well, that's even better. That's terrific to hear.
Yeah,
So before we jump into the meat of what we're going to talk about in class, so to speak,
yeah.
today, if you could go back to that 28-year-old Daniel, fresh to Japan, particularly as it relates to all things related to money, what would you tell yourself now from the perspective 20 years later?
Yeah, well, I think I was in a little bit of a different situation than most people in that most people, at least that I met, were 22. They just graduated
Mm.
university and they were looking to have a good time. I had this sort of complex where I came at 28 and I thought I was old, and I felt like I really have to get my stuff together here.
Ah,
And so I had almost a plan as soon as I got here that, this is gonna be my career. I'm going to do something, even if I return back to the US for I wanna be a teacher, so that's what I'm gonna do. Um, so when I came, if you look at my financial situation, I think I sold a car before I came. I may have made 5,000, maybe $3,000 from
mm,
that sale. That's what I brought over, but I also brought over $20,000 in student loan debt. Um,
ooh,
so I was at a negative net worth, and luckily, I went into a bookstore, and I think it was in Osaka. I picked up a book that was called The Complete Idiot's Guide to Getting Rich. And I wouldn't recommend that book. It was a great book, but I wouldn't recommend it now because unfortunately the author died while writing it. And so there's never been an update. So I've had some people I've said this book and they've gone out and bought it and I'm like, it's 20 years old. There's better books out now. But it was a great book and it walked you through the steps of how do you earn money, how do you save money, how do you start investing in index funds, and then maybe move on to real estate and business.
ah,
And I followed it, pretty much to a T, just, the advice in that book. And so I was progressing pretty much from when I first came. Maybe after the first couple of months, I got my job. I started saving immediately and following the steps in the book. But at that time, 20 years ago, there was almost no information for foreigners
ah,
about how to invest. So I made a lot of mistakes along the way. Um,
ah,
that I wish I could take back. But in general, I don't know if there was any major mistakes. And really leading back to this book that I luckily found that really put it together for me. Um, but yeah, I think that was the main thing. I will say I did get lucky as well in
mm,
my timing. I was mostly investing during the financial crisis in the US,
mm,
2008.
prices are low.
I didn't even know there was a financial crisis.
Hey,
So that was great for me because I'm starting to invest while the market's already fallen. And eventually I invested in real estate while it's still fallen. And at that time, it was also 75 yen per dollar. Um,
ooh,
so again, building wealth back in the States, I had an advantage that some, people nowadays don't have. It doesn't mean you can't do it, but there may be different strategies. But really, I may be sounding full of myself, but I think I got
mm,
lucky in terms of what I learned and what I put into practice and didn't make any major mistakes at 28.
Okay, well, that's good to know. And back to that book,
Yeah.
whose author passed away before it being published. Which chapters were never completed, do you think?
Well, it actually was completed, so it was a sad story, it was in the
Oh,
book, and his friend took it over. He was also a CPA
oh,
or a CFP. He took it
okay.
over, they finished the book, but the only thing is that, yeah, again, that information is 20 years old. There's more updated information, so it's still a good book, but I had a few from my people had listened to a podcast, and they went searching for it, and somebody paid $100 to buy this book because it's out of
Oh,
print. And I was like, "What are you doing? No, like, you don't need that book." It was great, but I think there's some new ones that I would recommend now, that
okay.
are better for people.
All right, very good. Well, we'll ask you a little later about those.
Okay.
I tell you what, let's get started with really back to the basics. And please, for anyone who has a question, go right ahead and put a question in the chat. Uh, we want to start with somebody who is, let's say, in their early 20s, for example, new to Japan from coming from overseas, literally has perhaps no investments, saves, maybe a little bit of debt like Daniel had when he came here. What would you recommend that someone in that situation do in their first 90 days, assuming they have a job?
Okay, well, before I start, I will say that while I'm a financial educator, I'm not a CPA, I'm not a CFP, I'm not a lawyer. So, I can give you the general my experience and whatnot, but please understand that, if you're going to take some specific steps later on, you may need to consult with those individuals as well. So, just keep that in mind. But I think there are three things that I would recommend to anybody. The first is tracking your numbers, knowing your numbers. The second
Mhm.
is saving, and then the third is investing or paying off debt. So if we were going to break that down into 30-day increments,
Mm,
um, the first thing I like people to do is to track for at least a month, as manually as possible, their cash inflows and outflows. Um,
mm,
so it could be on pen and paper. I'm not a real pen and paper guy, but at least a spreadsheet. And the reason I say manually is that there are some apps like the Monarch Money app in the
oh, yeah, yeah.
US, which are really good, but they give you a picture after it's already done. I think for
Mm,
this first month, you should be tracking in real time, maybe daily, maybe weekly, because you want to feel what you're spending and you're getting. And it's
mm,
hard not to have that visceral experience with it unless you're writing it down. And just the fact of tracking, like I'm trying to lose weight, like many of us. And one thing that I've learned is that when you consistently weigh yourself, when you consistently track your calories, even if you're not changing anything, you tend to make progress, right? So
mm,
that's the first thing. Tracking your inflows and outflows of cash is the first, and also making a personal balance sheet, so a net worth statement, so
mm,
you know where you're at. That's the
mm,
first 30 days. Once you've got that done and you have an idea of, how much money is coming in, how much is going out, how much, debt you may have, and what's the percentage interest rate, all of these
mm,
things are written down so you know your numbers, then you can start saving. Um, and it may mean budgeting a little bit, cutting some things out. It could mean that we're looking at getting an extra job because maybe you're not making enough money to save in the same way that you need to. But a little bit of advice, something that I've done and still do to a certain extent, but it's a little more complicated now, is when I came to Japan, I opened two bank accounts and
mm,
my money came into the bank account. Let's say it was 200,000 yen after taxes, right? As
mhm,
an Eikaiwa teacher. And I knew that I needed 150,000 yen a month to live and have a bit of a buffer. So I would leave that in the first bank account and I'd immediately, the day it came in, move the 50,000 yen to another bank account. And by doing that in the first year or two that I was doing, I was just saving, I built up quite a large lump sum that I could then invest. And that's the next step. So once you have those savings, now you have to go after your goal. So here's where there's almost a little bit of a flow chart. If you do have high interest debt, I was talking to an American teacher the other day, and it turned out he had $20,000 in credit card debt. back in the States, this is 25% interest or something. It's not worth investing at that point because you're not going to get that return most likely. So he should be concentrating on paying off his debt. If you don't have this high interest debt, you may use a hybrid approach of paying
Mm.
some off and investing. But really, the whole point is to get the high interest debt off so you can begin investing into the market.
Terrific advice. Say back on the savings, it sounds like you are extremely disciplined, and that's a great approach to open two separate bank accounts so you can segregate, push that savings off. What about, I mean, in America, it's really easy to automate that
Mhm.
process. What about in Japan? Have you found that, like to a brokerage account, you can automate to a certain extent?
So my understanding, I know we're going to talk about this in a little bit. As an American, that becomes more difficult. Um, the reason being is that if you're not an American, you have access to something like the Tsumetate NISA
Yeah.
account, which can be
Mm,
automatically withdrawn from your account. But with the other accounts, you usually have to make a deposit. So there are some extra steps. I um, I actually enjoy the extra steps. I like to make things a little bit, give me a little bit of something to do because
mm,
it makes me understand my money better. But I
mhm,
know some people are not in agreement with me on that. But I have almost a flow chart, and it's something I could probably share on the Five Professor blog post. But I have a chart that I know with my money that comes into Japan and my money that comes into the US, what are my automatic actions?
mm,
So, if I need to top up a savings account, it goes there first. If I need to pay a bill, it goes somewhere else. The excess goes immediately into my investment account. And so I have like this flow chart that I follow, and I do it on the first day I get paid, either in Japan with my salary or in the US with my rental properties. Um, I just automate it myself. So unfortunately, I don't think there's an automatic way to invest here in Japan if you're
okay.
an American, but I think for another nationality, they would have that opportunity.
And okay, terrific. With regards to people that are non or resident foreigners that are working in Japan, earning money in Japan, let's say they're an American,
Mhm.
would you recommend investing in Japan or in America,
Mhm.
or both?
Yeah, so I always recommend both if possible. And there's a couple of reasons for that. Like just, to kind of paint a picture of my situation now. Like, now I'm an older guy. I've been doing this for 20 years, so I have all these systems set up. As I said, rental properties in the US, salary here in Japan. Um since the Japanese yen has gone to 150 yen per dollar, I have a lot of friends that are earning good salaries as professors that have said, "Hey, I've got to cancel my US trip because I can't afford to take my wife and my kids or whatever back at this rate." But my wife and I, we go back to the US every year. We stay about a month, and we don't touch any of our yen. We're living off of income that's coming into the United States. So as a dream,
Mm,
it's incredible to kind of repeat this and get in a situation where you have almost two economies going on, where I use yen in Japan, I use dollars in America. And so for that reason, if possible, I tell people to try to build these accounts in both countries.
mm,
As a first step, though, I think it's probably best to build in Japan. It's a lot easier, and then to expand into the U.S. accounts later because there's a little bit more work that needs to be done, and we can kind of touch on that of
yeah,
how to open and maintain U.S. accounts and some of the opportunities with real estate as well. But in Japan, I think that's usually the easiest to keep the two bank accounts. And if you're an American, um, really your go-to brokerage here is going to be Interactive Brokers Japan.
yeah.
Um, they have a taxable brokerage, but they now also offer a NISA, the growth section for Americans, where you can invest in American ETFs. So these are really your first go-tos, I think, here in Japan as an American. And if you're not an American citizen and you're lucky enough to be able to have everything open to you, you can invest in Rakuten or SBI,
Yep.
start a NISA. You could look into an eDeco and maybe eventually, you know, a regular brokerage account.
Terrific advice. Very good. Okay, that takes us to about 90 days in.
Uh,
What do you do after that to
yeah.
develop more of a real long-term financial plan?
Yeah, so I sort of touched on this a little bit, but I think the first step once you start investing is to open. I really think the NISA is the way to go.
Mm,
And probably a couple of months ago, I would say as an American, your
mm,
choices are very limited with the NISA. But since Interactive Brokers has opened the new NISA account, and I've actually tested it out, I made my first deposit this month, and
mhm,
everything went through into a US ETF. So it seems like this is good to go. So I think that's for almost anybody. The NISA is probably the best. One reason is because it's so flexible. So you can
mm,
pull that money out tax free in Japan at any time.
mhm,
Now, keep in mind if you're an American, uh, America does not look at that as tax free. It's a brokerage account, but usually the taxes are higher in Japan. So I
mm,
still think it's worth doing as an American. So I think that's the first thing is you're going to open up a brokerage. If you are non-American, the two brokerages I would recommend are Rakuten or SBI. It's what my
mhm,
wife uses, um,
mhm,
and she invests in an all country fund, so
mm,
it's just one fund. She doesn't need to think
mm,
about it. She just puts all of her money into that, and it gives her diversification across the entire world. I think it's more heavily tilted towards the U.S. because it's the largest economy. And if you're an American doing it through Interactive Brokers, I will say Interactive Brokers is a pain to open up. I think it takes 6 to 8 weeks to get your account going, and there's
yes.
gonna be a lot of messages back and forth and things you have to provide, and then it's not and then the app is not, easy to use. It's really hard. I couldn't fund my NISA for a month. I couldn't fund the FI professor for a month because I couldn't figure out how to do it. Um, so,
Mm,
that's something I hope in the future, maybe I can make some screenshot videos of how to do it.
mm,
Um, but I still think it's really the only game in town.
yes.
And then so that would really be the first step as you build your investments, I think, is the NISA.
Okay, well, that's very clear, very clear. And then, especially because a lot of foreigners coming to Japan to live and work for a while, the emphasis is on for a while. They don't know often how long they're going to remain in Japan. Now, of course, if you're going to be here like the two of us for an extended period, I could see why going through all that effort
Mhm.
to open up an account at Interactive Brokers, for example, makes sense. But what about somebody that's maybe only here for a year or two?
Yeah, I think again, it's going to depend on your nationality of what you
Got
do. We this may be a good time to touch on how you can open and maintain accounts in the U.S. as a U.S. investor. So if I was a U.S. investor and I'm like, oh, I'm just going to stay here a couple years, you could do the NISA. You could go through the trouble of it, and you will be able to pull that money out. It's a little bit harder. Well, I don't want to go there yet, but uh, you could still do the NISA as an American, but you may want to open an account just back up in your hometown if you don't already have one. I'm saying hometown, home country. Um, and the way to do that is for almost all US brokerages and banks, you need a US address.
Yes.
And there's a bit of a gray area here, though I have talked to several CFPs about it. They've said there's nothing illegal about doing this, but it is sort of a compliance issue. So if your brokerage finds out, oh, you're actually living in Japan, they will most likely freeze your account.
Mhm.
And so this is a major concern. So what I recommend, especially if you're first coming over as an American, is to maintain your address in the
Mm,
U.S. I do that by having a driver's license. I file my taxes with that address. It doesn't
Mm.
affect my ability to claim the foreign earned income exclusion, but I use that address. I pay a bill at my house that my mother lives in the US, a utility bill, which gives you even more strength
Mm.
in this argument. And then third, I make sure that all my bank and brokerage statements go to that address. So I have
I
a
see.
lot of documentation that ties me to that address that I can provide to show that I can keep it open. But again, it's still a gray area. um, there used to be some brokerages that would allow you to have a foreign address, and still, if you're in the military or whatnot, you can
Yeah.
do this. But for the most part, a lot of those programs have been closed down. I believe there was like Schwab International and Fidelity International that used to allow it, and now they don't really. But that is your other option. So as an American, you could open the NISA and you can take that money back with you when you're ready. You would have to pay US taxes, capital gains when you pull it out. Um, or you could just keep your US accounts open or open a new one and just invest in that. So that's one option. If you're not an American, I would still say go with Rakuten or SBI, do the NISA, and if you're ready to leave, you can pull that money out. The only issue there would be the timing of the market. So if you ended up in
Okay.
a down cycle, you
Mm.
you may be pulling money out at a time you don't want to be doing it. But I think being successful at life is a series of educated bets. And you have to say, okay, I'm going to stay here for 2 years, but I don't know, maybe I'm going to stay longer. So I don't want to not invest for fear of something like that. I think it's better just to go and make the moves and deal with it when it comes up.
Okay, that's clear. Say, you've been here for a long time. I'm sure you've interacted with a lot of foreigners living in Japan. I don't know how often the subject of managing money comes up with them, but uh, for common mistakes that you have seen, what kinds of things do foreigners sometimes do here that you would counsel against?
Yeah, so I think the first thing that I would say, and again, I hate to keep doing this, but there really is a big difference between Americans and everybody
Yeah.
else, right?
Mm.
So one of the things I see Americans, for example, doing is just feeling like they can't invest. I really like
Mm.
Ben Tanaka's Retired Japan. Often you'll see when he posts about NISA or Ideco, you'll have Americans underneath and be like, "Still closed to Americans? Oh, I guess I'll give up." Like, and so there's this feeling that, "Oh, if I don't invest in a NISA or an Ideco, I can't invest." And it's not true at all. 20 years ago, when I first moved here, there was no option to open a Japanese account. There was no NISA for an American. Um, you couldn't do anything. So I built, a multi-million dollar portfolio on a taxable brokerage account. I
Oh,
just
okay.
opened a Vanguard account in the US and I
Mm.
contributed to it. I didn't get as much tax savings, but I was still able to do it. So I think that's one of the first ones is just not knowing you can invest, right?
Mm.
And that's more prevalent with Americans than it is with other nationalities. But even for everybody, just understanding that there are ways to invest while living in Japan, and you shouldn't worry too much in terms of like what we talked about. Oh, what if I move back in 2 years? Or what if I do this? Just keep your flexibility with your
Mm.
investments so that they're portable. That's probably the first one. The second one, again, that maybe applies more to Americans is the tax side. Um, when I first came here and up until maybe 5 or 10 years ago, I cannot tell you the number of Americans I met that had no idea that they had to file taxes in the
Mm.
US. And if you open your passport, I think it's on the back page, it says, you're taxed as a citizen of the United States. If you are eligible to pay taxes in the US, you must file a tax return. And I met so many people, and I think that advice was even given by CPAs, especially to the older generation, I know people have been here 30, 40 years, and they used to say, you don't need to file taxes. Don't worry about it. You're living in another country, because they just didn't have the knowledge. That's less of a problem now. So,
Mm,
Americans might know, like, no, I have to file taxes. I know that.
mm.
But what they run into is things like PFICs, which are passive
Yeah.
foreign income companies.
Mm,
So, a passive foreign it's a way for the US government to discourage people investing in foreign countries. So this is the reason that NISA and IDECO were or still are problematic for US citizens, because the offerings within them are PFIC. So even if it's an S&P 500 US stock market fund, if it's domiciled in the US, in Japan, it's a
mm,
PFIC.
mhm.
Some single stocks, I believe SoftBank maybe is a
Mm.
PFIC, because they
Oh.
have a financial services component. I think it's SoftBank,
Mm,
but there's one of these. It's really difficult. So I've met some Americans that just went ahead and did the DECO and NISA, invested in Japanese mutual funds, and they did it for years. And
yeah.
they're just like, oh, I didn't know that I couldn't do that. So I would say those are the
Mm,
two big ones. And I know that's kind of an American, uh,
mhm.
sort of American centric, but that's kind of where I'm coming from. Um, More international wise, I think, is just understanding the whole financial system in Japan
Yeah.
when it comes to pensions, your obligations, as we're finding out, to pay into the pensions and to pay into the your taxes here in Japan. Now it's going to threaten your permanent residency for some people. I think having an understanding of those systems is really important, um, if you're going to be living here, especially long term.
So it's good advice. Let's do a quick check of questions or comments. Oh, okay. Here, that's the geo arbitrage advantage with Forex. Well, that's an interesting topic. How do you manage foreign exchange? Do you have like a Wise account, or how do you handle that?
Yeah, so I will say I don't do any forex trading. Personally, I do have a friend who does that a little more, so I couldn't talk specifically about the trading aspect. I do have a Wise account, and that's my main way of bringing money back into from Japan to the U.S. When I have brought money here to Japan, I've usually used a direct wire
Mhm.
into my Japanese account. I have a Ally Bank and USAA Bank in the United States, um, but since we've gone to this place where we're at 150 yen per dollar, and I understand I'm lucky enough to be in this position, have not moved any money
Right.
from yen to
Mm.
dollars. And just if you wanted to talk at like a high level strategy, better than what I do, I have a friend who is Canadian Japanese. Um, he has real estate investments in Japan, Canada, and the US. And
Mm.
he plays this arbitrage game at an incredibly high level, right? So, when his properties appreciated in the United States, and especially when the yen flipped, he cash out refinance properties in the US. He used dollars to buy Japanese real estate, and vice versa. And so he's always playing this game. He's very astute at that. So I think this is one of the great reasons of having these sort of cross-border assets. The
Mm.
things you can do at a higher level, are really incredible. And that doesn't, obviously that there's sort of a step by step basis. You need to learn to walk before you can run.
Yeah.
But once you have the basics done, and if you have assets in different places, you can start looking at how you can play this game across different borders, right?
Yes. And so I don't mean to go down a rabbit hole, but
Yeah.
you prompted me to think about how low the like mortgage interest rates would be in Japan, and perhaps that would be an opportunity to tap into if you wanted to buy real estate in Japan.
Yeah. So, again, a little bit of a high level topic, but there's some interesting things here. So, when I first started investing in US real estate, I didn't even know the advantages. So, At that time, this loophole has been closed, but at that time, as an individual, if I bought a property that was over 20 years old and a wood structure, I could depreciate the entire structure amount at 20 over 4 years and
That's
directly from my salary. So let's say that you had 100,000, you're earning $100,000 a year, you have a $100,000 structure. In 1 year, you reduced your salary to 75,000, and if you had 4 properties, it was 0. And the reason it worked with US real estate, not with Japanese, this is why it was a loophole, is in Japan, there's not much value usually in the structure after 20 years. So you couldn't do it. But what people were doing is buying US real estate that maintains most of the value in the structure and depreciating that against your salary. So I did this for a number of years, and it's one of those things like I didn't even know it. We went to the tax office. They looked at our documents. They're like, "You're doing this wrong. You can do this and this." So the NTA told us how to do it. We were like, "Oh." So we did this for a number of years. It was great. The loophole was closed. Understandably, there's no benefit for Japan to be doing this, but they closed the loophole. But it's still open to business owners.
ah,
So, if you have, and I've never done this again, you're going to have to consult with a professional that's smarter than me. But from what I understand, and I know a few people that do something like this, if you have a business that's making income in Japan and it's in a KK or GK or something, some structure, you can open up a subsidiary LLC in the US that invests in real estate, and then you can depreciate it against your business income. And again, at a high level, it's hard to access, but eventually you can even get debt in Japan at like the 2% rate to buy US real estate or other countries' real estates that can be depreciated. And this is, what Japanese companies do. And as I said, I'm not a CPA. I've never actually done this, but I've met a few people that have. So it's just to give you a little bit of a spark of maybe this is something to explore with somebody, um,
yeah.
of how to do it. But I even had an American friend who was in commercial real estate in New York, and his specialty was selling wood structure buildings, these garden style apartments to Japanese companies because they were using it for that reason. So, yeah, I mean, there's a
Huh,
lot of exciting things once you get the basics done. So that's why I tell people, get your savings and your basic investments done, and then there's a lot of possibilities on the other end of that.
good. Hey, we have a question.
Yeah.
Okay, the Jap how do the Japanese investments affect Daniel's spouse's tax returns?
So here's the good thing and the bad thing about spouses in Japan. Um, this is from a money perspective. Um, so in Japan, you are separate entities,
Yeah,
right? This is bad because when that spouse inherits, or if you wanted to give a gift to your spouse, they're subject to all these sort of limitations. Whereas usually, like in the US, there's an unlimited gift amount. I think unless your spouse is not a US citizen. Um, so there's things like that. But the great thing is that we can run our own stuff,
mm,
right? So
mm,
my wife doesn't have a green card. She's not a US citizen. So before the NISA was available to me, for
mm,
years I would give her the maximum gift amount, 1.1 million yen
right,
every year for her to invest in her NISA. It doesn't affect me, because she's looked at separate. In the US, I file taxes as married filing separately, and my wife doesn't file. She doesn't need to file.
sure, mm,
Yeah, it's looked at separately. So anything I do doesn't really affect my wife and vice versa.
mm.
So I think that's hopefully that answers that question. And
Yeah,
that's another good strategy.
yes, that is a good strategy. I know it well. And,
Yeah.
but, for the person that asked that question, if that's not clear, just put a comment in and we'll try to get back to you. Very good. Hey, can you go back to the passive foreign investment company
Mhm.
issue for Americans? Maybe we can jump into more American specific things. But
Yeah.
yeah, I was under the impression for a long time that, and I probably made this mistake 2 years ago, investing in Japanese mutual funds, which was a mistake. But since I'm an American, however, don't have that anymore. It's possible, though, to use like a NISA account to invest in individual Japanese stocks as long as they're not like the SoftBank example that you gave. And then
Yes.
also you can use it to invest in ETFs in America, right?
Yes. So before the Interactive Brokers NISA account came out that allows for American ETFs,
Mhm.
the only strategy for Americans was to invest in individual Japanese companies that were not PFICs. Again, you have to do a little bit of research because some of them that you think
Yeah.
would not be are
Mhm.
a PFIC. And there's a reason you might want to do that. Like one of my friends had said to me, he's doing that instead of the ETF strategy because of the currency situation.
Mhm. Yep.
He wants because, if I buy an ETF in a Japanese NISA, I'm still investing in US dollars.
Right.
Um, so it's gotta convert and it's gotta do all this stuff. So he likes that using a Japanese, single companies. Of course, there's some negatives to that, and at a high level, if you already are a high net worth individual, that might be a great strategy because it represents a smaller portion of your total portfolio. So like my I like to keep 5% of my total equities in Japanese
Mm.
exposure.
Yep.
But if all you're investing in is an NISA and you're maxing it out, or at least the growth portion, and it's all single Japanese stocks,
Mhm.
that's not a bet that I'm wanting to take, right? So that
Mm.
that is that's the negative, and then the positive of again is that you are investing in a different currency.
Yeah.
Um, so yeah, so that's the reason you would do that. But yeah, that is one strategy.
Sounds good. Oh, the questions are coming fast and furiously here.
Oh,
Okay, so or back to real estate. It sounds like this is a person that has real estate property in the United States,
mhm.
thinking about moving to Japan. Should I keep the property? Well, sounds like the answer is yes, but please enlighten us.
Yeah. So let me jump into, I'm going to kind of broaden it out a little bit because the one thing I will say, so as an American, we feel, agree. We feel like we're attacked in the situation. We live abroad. We still have to file taxes in the U.S. It's a negative, and so people get really into this, like, oh, I can't believe this is terrible. The good point of it is because we file taxes in the U.S. We have a record of our income, and that allows us to get U.S. bank financing for real estate and possibly even businesses or anything like that. If you are a UK citizen, from what I understand, you really separate from the UK when you move abroad. So it's probably impossible or very difficult to get a UK mortgage with that. But as a US citizen, that is the big tax advantage. And even without the loophole I described, there are so many tax advantages of having real estate in both Japan and the US. So currently I probably bring in about 40 or $50,000 a year in cash flow from my real estate investments in the US, and I'm not taxed on any of it in Japan or the US because there's so much depreciation and other
Yeah.
deductions you can take. So there's some real advantages of doing that. Um, for this individual that already has a property, um, in general, I would probably say it's a good idea to keep it, mainly because Japanese real estate, as we know, doesn't. We have seen a lot of appreciation in recent years, but there's not this same market where we have this sort of increasing, at least with inflation of the appreciation of the property, the appreciation of rents. So it's a little bit harder to count on. So I really like the idea as an American that I can continue to build this incredible asset in the United States while living in Japan. And even if I own my own home here that may be depreciating, I have this other asset working in the background that at some point in the future I could cash out, refinance, which is tax free, or I could sell it. So there's just more to tap into. That being said, two caveats. First of all, if you're gonna do it and you're gonna rent it out, you need a great property manager,
Ah,
um, and that can be a process. So, I've dealt with everything you can imagine with real estate. At one point, I owned 50 units, total in the U.S. With some partners. So we had people that burned houses down. Anything you can imagine. None of it was that bad. I will say
Okay.
that. You have insurance, you have all this stuff, but you need a good property manager. So that's number one. And number two, where is the property? Because if you need to find out, not every market, just like in Japan, is going to be a great place to hold a property.
Mm.
There are going to be areas that, like right now, Florida real estate is dealing with a lot of issues with insurance. Same thing with California. So those costs, whether the landlord tenant laws are in favor as the landlord to the landlord, I don't want to be in a situation where people can squat in my property and I can't get them out no matter what. So there's a couple of caveats there depending on where the property is. But I think in general, it's a good idea to keep it.
All right. Clear answer. Very good. We have a follow-up to that question about tax returns as it relates to your spouse.
Mhm.
What happens if the Japanese spouse has U.S. permanent residency and filing taxes jointly? Hmm.
So if your spouse has a green card, they are a US tax resident. They have to file taxes every year. They also have the limitations of investing in like PFICs or anything like that. So yeah, you're basically treating them like a US citizen. So some people strategically will get rid of their uh, US permanent residency. So you have two spouses that, maybe have different tax treatments. Um, but if your spouse is going to keep it, then you have to think about them as basically an American. They'll have to follow the same steps that an American would in what type of accounts they open and what they do. I think this is actually quite a big problem in Japan, which maybe we haven't realized yet. And I wonder if it's going to get caught when AI becomes more prevalent to find
Mm, mm,
people in the US, because I meet students all the time that were born in the US and have US citizenship, and they've
mhm.
never filed a tax return
Ooh.
in the US because they don't know. They're just like, "Oh yeah, I got a US passport," and they think it's great, and then
Mm,
they don't realize that they haven't filed it. Now, usually in Japan, you have to give up that US passport to get
yeah.
your Japanese one, so it could take care of it, but it's something to think about. I do, just to touch on that, I do worry a lot, especially for the old timers in Japan. I've met people in their 60s, lived here a long time, have never filed taxes in different places. So maybe they file taxes in the US, but they don't report things in Japan or vice versa.
Mm,
And a
mm,
lot of them got that advice from CPAs. They're just like,
mm,
"Oh,
mm.
yeah, I even got that when I first came." I asked, and they were like, "No, you don't need to report anything." So the thing is, I wonder, once AI becomes good enough to just scan through everybody's records, how many people are going to get caught up in hey, they have been filing, they haven't been reporting all these properties or the trusts they own or an inheritance back in the US, and they haven't reported that to Japan. And
Mm.
yeah, I probably scared a couple of people, but I do this quite often to my older friends. I'm always saying this, and they're like, "Oh no, what am I going to do?" But I think that is a danger as we go forward to
Yes.
sort of AI's usage of looking at documents. And Japan actually announced this year that they were starting to use AI for that purpose. So
Well, and we also know that for example, back to the American IRS, Internal Revenue Service is certainly connected to the hip to the Japanese
yeah.
National Tax Authority. So there's no way to hide anything. Yeah.
Yeah, I think it's more difficult. I've heard some are more connected than others. Like, I have an Australian friend who got an inheritance in Australia, and he went to Australia to actually access it and move it to his bank account, and they immediately were like, "We know you live in Japan. We're reporting immediately to Japan." I think America is usually a little bit of an extra step, so some people
Good.
get away with it, but I don't think that's going to last forever. So I would say talk to a CPA, talks to a tax lawyer, figure out how to get current if you're going to live
Mm.
here permanently, because I don't think it's going to be a good situation down the road.
say, I want to back up just a little bit. Maybe this is back in the basic sections that we already covered, but
Mhm.
I recall since I moved back and forth between Japan and Chicago, which is where I'm from, 3 times, and it took me 2 times until figuring out leave credit card accounts open in both countries because otherwise you have to start over again.
Yeah.
Can you talk a little bit about that and the challenge of getting credit in a foreign country?
Yeah. So again, I must have some real luck here, but when I first moved to Japan, the first week my Japanese friend took me to a bank and I got a credit card. I've heard so many Americans that are like, "How did you do this?" Right?
Yeah,
But
right.
I did. So I've always had a credit card here in Japan from day one. Maybe he was a good talker. I don't know what he did, but he got me a credit card. But I do think that's really important. So one thing, I never had credit cards. Probably the thing that saved me financially in the US is all through my 20s, I never had a credit card and I
Mm.
actually never had a cell phone. So,
Whoa.
um, yeah, I really didn't, which is funny because 'cause I'm an educational technologist, but, um, I didn't have that. So when I came to Japan, I got into finance. I had my Japanese credit card, of course. I immediately started paying off my student loan debt. And
Mm.
then what happened was I paid off my student loan debt, which was my only debt in the US.
Mhm.
And when I thought, "Oh, I better check my credit score," I'm looking at this information, and I went back, I had no credit score. I had no debt in the US, so I had no credit
Mm.
score. I'd never had a credit card. So I had to start from the beginning because I knew eventually I wanted to buy real estate, and you do need a credit score for that. So what I did is I opened a secure credit card. I think it was through Discover.
Mhm.
So, I had $1,000 in the bank, and so they gave me $1,000 credit or something. I used it. I tried to use it, regularly. I paid it off every month, and eventually I was able to get a regular credit card and then
Mhm.
move on up. And there's some incredible advantages of doing this. I know a couple that I met recently who full time travel the world with their 2 kids. The kids go to French international schools wherever they land. So Japan has one in
Mhm.
Kyoto. They have an online one. They also go to French Polynesia. They do all these type of things. And they told me they spend almost $0 for their hotel and for their travel because of the credit card points that they accumulate.
Oh,
Yeah. And so it's an incredible advantage. I know for some people it's not, some people overspend, and if you have that issue, maybe follow the Dave Ramsey approach and cut them up.
right.
But if you can use them, it's great. And it's great to have credit, of course, in both countries so that eventually you can hit those high level tactics.
All right.
I
Very good. Hey, we are rapidly running out of time, and we still have a little bit of time. I did want to get into
Mhm.
fire and
Okay.
your view on that. Well, first of all, maybe you could just explain to everyone what is fire and how would that, what does it mean to you?
Yeah, so FIRE stands for Financial Independence Retire Early. And the thing is, I think more and more it's becoming more about the financial independence than the
Mhm.
retire early part.
Yeah.
When I first started along this journey, I definitely thought once I hit my FI number and the number I needed to make work optional, I would quit and I would retire. But what I found is that, first of all, I really like most aspects of my job. There's some aspects I don't like. But also with AI, and I wrote a,
Mm.
a post about this the other
Yes.
day. With
Yes.
AI, so many of those tasks that are troublesome to us are are now getting taken care of for the most part. So, and I think it depends on your job, but definitely as a university professor, my administrative tasks are have borders. So meaning like if I take care of all the scheduling for the year, I don't get more scheduling. If you work for a company, that may not be the case, but what's happening is that so much of what I do, sending emails in Japanese and doing all this type of stuff, is taken care of by AI. So where the concentration, and I think a lot of people are seeing this sort of shift as well, where once you reach financial independence, it's not really about retiring like to a golf course. It may be for some people that could be the goal, but most people want to find meaningful work
Mm.
or something
Yeah.
that at least occupies some of their time. Um,
Mm.
so that's the real concentration. So I think it's really more about lifestyle design at this point, but reaching that point where your assets cover all of your expenses is just an incredible feeling, right? And if something does change at your work, you get sick, your spouse gets sick, something like this, you just have way more options than somebody that's relying on their job for money.
Yeah, I agree. How about asset allocation? What's your viewpoint on that overall?
Yeah. So I mean, so I'm kind of a diversified investor. I have some friends, for example, it's you especially find this with real estate investors who are like all in on real estate. They just believe the tax advantages and whatnot are so great that and you can actually affect the returns much more than you could in the stock market. So why would you ever do it? I'm not of that idea. So for me personally, I'm basically split 50% between direct ownership of real estate, which is all in the States at this time except for my home, and 50% that goes mostly to stock market assets, like equities, bonds, a little bit of cryptocurrency, and and then cash, having a good cash position for opportunities, and then also as an emergency fund.
Mm.
When it comes to my equities, I am heavier tilted towards the US in both
Mm.
large cap and small cap funds. But then I also have a good exposure to international markets and emerging markets.
Mm.
If you're interested in actually the breakup of what I do have a blog post. It's a bit out of date, so I may make a new one,
Mhm.
which is called "What's in the Five Professors Portfolio." Um,
Okay.
and I break it down by percentage, by country, and all the funds I actually invest in each account. So you can get a really good idea on that of what I'm doing.
All right. We'll head over to the website. And speaking of the website, you alluded to this a minute ago. You've been fooling around with ChatGPT to manage your own family business.
Yeah.
Tell us about that exciting project.
Yeah, so this is an extension of my research. So one part of what I'm doing with my
Mm.
research is looking at how generative AI models, how good they are or how bad they are at answering financial and tax questions, and how we can make them better. So in the blog post, I kind of give a very high level view of what's called a family office. So a family office is actually usually I think you have to have about $50 million or more to have a real family office, and it's an organization where let's say you're the Kardashians, right? You have a lot of money. So what you do is you basically create a full time company that's a lawyer, a CPA, financial advisors, and they're working for you full time in your
Mm.
office. So there's a way to do that. So there's an interesting structure there of how to manage finances, but it's beyond what most people can afford, of course.
Yeah.
So what I'm looking into is how can you create a virtual family office using
Mm.
generative AI? And there are some very specific steps that you can go through where you create a project or a custom GPT where
Mm.
it's preloaded with all the information you need. So all of the NTA, the Japanese tax authority, all of the IRS documents, all of the case law eventually, we haven't
Ooh.
integrated that. Everything you can imagine gets loaded and integrated into the system so that when you ask questions, it's pulling from those documents. It's not hallucinating
Mm.
outside
Yeah.
of it. There's still a lot of work to be done on it, and I would caution it's not a replacement at this time for a CPA or a
Yeah.
lawyer, but it allows you to play with these ideas and get
Yeah.
some really good ideas that then you can go to a CPA
Um,
or a lawyer and say, "Hey, could I do this?" And get the real information. And I think in the future, to be honest, it will probably replace those individuals, um, which is great for us. but
Yeah.
but not so great for those professions. But
So democratization of the family office. That's
yeah,
exciting. Hey, we have another question.
yeah,
This is more about working as a professor in Japan.
yeah.
Is it possible to make a life as a professor in Japan? I see many fixed contracts being offered.
Yes. So there's a lot of so basically in Japan, just to give you an overview of what this means to work at a university, there are sort of adjunct positions where you're paid per class. This is what my wife does because she wanted to just make her own schedule. So she works at a couple universities like that. Then there's a fixed contract at Ritsumeikan. We call this a shokutaku position, where it's a 5-year fixed contract. Usually there you're earning somewhere between 5 and 6 million yen a year. It's still a great job because you only have to come in and teach your classes. There's no extra work, at least at Ritsumeikan, and you have your summers and spring completely off.
Yeah.
There's
Oh,
no obligation. Some universities are different, but it's a great job. And that's so I went through both of those stages. Then I earned a doctorate, and it's becoming more and more necessary to have a doctorate and a lot of research to get the tenured positions. In the past, you'll see again a lot of the maybe older professors that will have a master's and maybe not that much research and still get that position because there just weren't enough of a pool to hire from. But now, you're looking at sort of on par internationally of what would be a tenured professor, meaning you have a doctorate, you have a good research record. Um, and usually for these positions, we're talking 10 million yen and above
mm,
for a salary. So it's a good salary in Japan. And again, depending on the university, you may have most of your summers and spring off. It's an incredible job, right? Lots of flexibility. The issue that comes in is there is a bit of ageism, that's not really ageism. So, and as I've sort of learned, really what's said, if you are, they usually try to hire tenured professors under 40. And
oh,
at one time, I thought, oh, they're just discriminating. I realize
mm,
now why they do that, and it's because they need to stagger retirements.
ah,
So they don't want if they have a bunch of professors that are 50 and 60 and they hire a 50-year-old professor and they're going to retire at the same time, they could lose the program. So they're trying to stagger these. So I often say like if you're over 40 and you're like, "Should I start a doctorate?" Maybe
maybe
if you have other things you could do with it. If you are uh but if you're in your 30s and you really want to go for this, I think you have a good chance of getting a position. Now, last thing I'll say, I do see a lot of universities moving to replacing the adjunct faculty and the contract faculty with dispatch companies. It's easier for them to manage. It's not less money for them, but it's easier to manage. And so what they do is the dispatch company for all the lower level like English classes will be taught by sort of like ALTs, but they're in the classroom,
Oh,
they're doing all of this, and then professors are still there doing sort of the higher level classes and whatnot. So I do think there is a bit of I've said this to a few kind of contract workers, like get your finances together because I
mm,
don't know in 10 years if Japanese universities are going to replace a lot of these contract workers with these dispatch companies or maybe even technology. I'm not sure.
oh,
Um, but
whoa.
yeah, I don't know if that's a good answer, but I think there's still opportunities. And the best thing to do, I would say, when I first wanted to get into being a professor, I got a lot of negativity of, well, do you know a professor? Like, how are you going to get the job? And I went to a couple of conferences and I found out, yeah, I met a bunch of professors, and most people are willing to walk you through and mentor
Ah,
you in what to do to get these positions. So it's not impossible. Go to the right events, meet the professors, and you'll be able to gauge whether it's a good possibility or not.
outstanding advice. So, speaking of advice, what have you learned from your students?
Yeah, so it's been a really interesting kind of evolution with my students in Japan because I've always been into financial independence and I've tried. with many students, even business students and everything, to talk about finances and used to get nothing. There was embarrassment. It's a Japanese cultural thing. It's not like, for example, my mother's from India. So, Indian culture, we talk about finances.
Yes.
Like you meet somebody you don't know, and the first thing you get is how much money do you make? It's normal. And so I never had this sort of issue with it. But Japanese students did. And so try as I might for many years to get my students interested, they weren't. The big change has been the push from the government of the
Mm,
NISA and EDECO plans, and
mm,
students are realizing they need to figure this out because
mm,
the pension system is not guaranteed. And so now I would say I have that's why I've been able to do what I do and change a lot of my classes to focus on that. Students are much more interested. I know I'm not answering your question right away, but
mm,
I think the key with this too, and this is true if you look at the research on financial literacy education, you cannot start with the nitty gritty. You can't
mm,
start with teaching them how to make a budget. You have to start
mm,
with inspiring stories of people around their age that are doing this. And there's a lot of opportunities here. There's a the Make It series, which is uh,
mm,
NBC. I'm not too sure who publishes it, but the Make It series has a lot of young people who are managing their finances well. And also, there is a teacher out in the U.S. and I cannot remember his name right now, but he has something where he has high school students that learn financial literacy, and he has a lot of their case studies. So starting with that and then working to budgets and everything is the way
mm.
to go to get them excited. Now, to answer your question, sorry, you said, what have I learned from my students? I think the main thing is learning where the hangups are with money that I didn't have. So,
Mm,
w- for example, I have always been a boring person. I'm very happy doing very low cost activities. I'm married to a woman that's the same way. Our lifestyle in Japan probably costs $20,000 a year if we go to the bare minimum. We're not very interested in that. But you might meet people who really struggle with spending. And
mm.
that's something I didn't deal with, right? And so understanding it from their perspective of why they're spending and being able to deal with those issues or why they're not investing, all this sort of money story that comes up in an individual, I think is the main thing I've learned from students. And it's made it so I think I can help people better that are different than I am.
Well, I can imagine you must get rave reviews from your classes.
I don't know. Yesterday they weren't paying attention at all, so I'm I'm not sure.
Uh-oh. Okay.
Yeah.
Uh-oh. Oh, okay. Well, we're running out of time, but,
Yep.
we're running over. One more comment here. So that's true. My oldest, who's a Gen Z, will not listen to older advisors, huh, like Susan Orman. Oh, yeah, and prefers to invest in their causes, like climate change versus tech companies like Tesla or Nvidia.
Mhm.
Maybe a day trader too.
Yeah.
All right. Well, that's a good comment. I imagine you come up against this too.
Yeah, I haven't in my department, I haven't seen that much, but it definitely is a concern that I've talked to a lot of younger people. You have, especially in the United States, this sort of backlash against capitalism, right? That we're seeing. And understandably when medical costs and housing costs are so high, I always tell people that there is a difference between what you believe and what you work for on a more global level and what you may have to do on an individual level to make sure that you're in a good position for the people around you.
Yes.
So I think that's one thing to think about, right? In terms of, um, you know, I may not agree with some of the like something tech companies might do, but am I going to put myself into a dire financial situation, which is not good for anybody, by not investing in the stock market because I have a belief against it. I think there's sort of a little thing there that I think you need to take care of yourself in order to work on these bigger global issues, But it is something to think about. There are ETFs and mutual funds
Mm.
that are specific for
Right.
different strategies like climate change or something like that. So that might be something that they'd want to look into. And I think it's a great conversation to have. Um, it is hard to deal with though, because I would say I most of my friends that have those type of views struggle. A lot of them, I would say, sort of struggle financially because they haven't taken the steps to sort of set themselves up. And I think that they would have more power to do things if they had more of a control over finances. I don't know if that's a good thing to say, but I
That
think
makes sense.
it's a difficult
Yeah.
thing to deal with of
Yeah.
personal responsibility versus your sort of global responsibility and how you manage it. But it's so difficult in life. We're so connected now that almost any action you take has a negative consequence of some type. That, like, let's say you're vegan. I mean, that might be great for the planet, but you're also maybe taking away the livelihood of
Mm.
people in the meat industry, right? So it's hard to balance these two. So I think, you should think a little bit of what you need to establish yourself, and then kind of look at this maybe larger global issue and how you can contribute it to it later. I hope
Well,
that's not too
certainly.
confusing.
No,
Philosophy is
no,
not
that
really
makes
my
a lot
thing.
of sense. Plus, you had a very practical example of going for a thematic ETF if you want to meet in the middle, I
Yeah,
suppose. So good advice. Daniel, we're
yeah,
over our schedule. It's been very exciting. But what do you have on the agenda coming up for the next 20 years as a professor?
yeah.
what what are
I
your big
yeah.
projects coming up?
I'm doing a lot of things. So as I said, I got this Kuckin grant.
Mm,
So I'm working on generative AI and financial literacy education. I'm planning to take this internationally next year
mm,
as part of my sabbatical. So I'll be a visiting professor at Cal Lutheran University for next year, and hopefully give a different perspective of kind of the FI professor on the road. Um, so that's kind of a new piece of information that I'm sharing there that most people don't know. Um, I'm looking to continue to contribute to the U.S. community here in Japan with information.
mm,
So I want to eventually, expand my blog and my reach with the FI professor, offer online workshops. I have
mm.
a survival guide for American finances in Japan that I'm hoping to put out next year.
Great.
And then, of course, I have the personal finance, Think Big for Personal Finance textbook
Yeah.
if you're teaching at a university. So, yeah, just a lot of stuff. And I saw somebody wrote, how do you get in contact? Um, I would go to my website, which is thefiprof.com. There is a contact form. My email is also accessible. I always forget exactly what it is. It's thefiprof@gmail.com that you could send it out to me. And actually, if you're available on the 30th of November in Osaka, I'll be giving a talk about AI and money at the Osaka Extravaganza.
Okay. Well, you are a busy professor. Well,
Yeah.
that is great to know, and thank you for sharing all that information. So we will end it today here. I think we're definitely going to have you back on
Oh,
Real
definitely.
Gaijin at some point. That's exciting that you're going to take a year on a sabbatical, not a year off, but a year studying abroad,
Yeah.
literally. And I will keep track of you on the Five Professor website. It's great. As I promised at the beginning, we are going to be publishing or recording that we've been recording it all along. We will be putting that out within the next 24 hours. So you can go back and I'll put in chapters so you can navigate a little bit easier through all the content. And then in the meantime, we'll also publish all these links. So, for example, of course, to the Phi professor, but also to Ritsumeikan University, for example. And I don't know if you're going to do anything with your Substack account, but we also have that too.
Oh, great.
And
Yeah.
LinkedIn, you're active on LinkedIn. So,
Yeah.
Daniel, it's been a pleasure. Want to leave everyone with some final thoughts before we have class dismissed?
Yeah, I think the main thing is don't get overwhelmed about all of this. There's so much information, but if you take it step by step, it's really easy to make progress, and that's all that you need to do. So don't get too worried about all the big stuff. Just take it step by step.
Can't add anything to that. Terrific advice. All right, everyone. Thank you very much for your attention. Daniel, it's been a pleasure. Have a great rest of your day or
Yep.
wherever you are in the world. Okay. Goodbye.
Great. Thank you.
お疲れ様でした。
Thanks for watching and or listening to another story from the Read My Lips series of podcasts on Real Gaijin. Tell us what you think and be sure to tune in again next time.